2030.
Saudi Arabia, the public investment fund,
it's a big
there's a lot of excitement
this
around
transformational
specifically.
change. Every aspect of the kingdom, economic, social, cultural, religious.
The 2030.
This is the 2030.
Yalla.
Welcoming on the 2030, Ramzi Abukhadra, Chairman of the Board of Directors at UBS Bank Saudi Arabia and Managing Partner of Mayasim Al Khalij Real Estate Development. Mayasim is an investment consultancy and real estate investment and development company in Riyadh, covering a wide range of investment opportunities in different asset classes. Ramzi has extensive experience in the commercial sector in Saudi, holding board seats at Hokair Group and Abdullah Turki Al Sons, and he has experience working with several financial institutions, including MetLife, AIG, AMB, and JP Morgan Chase. Welcome.
Hello, nice to be here. Thank you for having me.
Thank you, Ramzi. We're very excited for this discussion. We're going to kind of split it into two pieces here. One is generally on the financial services industry in Saudi Arabia, and then we do want to talk about real estate. I think a good place to start is if you can give our listeners and viewers a sense of the development of the financial services sector in Saudi Arabia in general. Where is it now, and where is it going?
Sure. I think if you look at the whole banking sector from a evolution point of view in Saudi Arabia, clearly like any bank in the world, it starts with the most basic requirements, that being of, custodying funds, deposits, something that the Saudi banks started a long time ago, whether it's the local banks or the banks that came in with foreign investors. You probably know that ABN AMRO a long time ago created the joint venture in Saudi Arabia, and they named it at the time Saudi Hollandi for the Netherlands, so to speak. And for the longest time, Saudi banks effectively took in deposits from individuals and from corporations as well, and provided loans, whether it's also to individuals or corporations, hanging on to what probably was a very nice risk-reward type of positioning in terms of who they lent to on the risk spectrum. So for the most part, many of the large corporations in Saudi Arabia, certainly the government was a big recipient of a lot of the borrowing from the local banks. And of course, on the consumer side, also there was and there continues to be, and if anything, it has increased dramatically in recent times. And I'll bring that to the table because it has to do a lot with the real estate sector in Saudi Arabia and the personal mortgages on housing, which has created a big boom in bank lending related to that particular sector, predominantly from the local banks. So as time went, it was basically a very traditional depositor-lender type of relationship. Of course, they continue to have their treasuries to manage, cash that is not necessarily being lent out or cash that cannot be lent out, because as you probably know, local regulations require that the bank continues to have part of its equity as, non-lendable assets. I think as time went and some banks and maybe some independent entities started working on investment banking, specifically asset management. So they created a lot of funds, be those equity, managing local equities and managing real estate funds. Each of the banks, also to comply by local regulations, created what is called their capitals, so to speak. So Saudi National Bank Capital, Forensic Capital, Arab National Bank Capital, and those are fully owned subsidiaries, but they operate as asset managers for the most part. And they, in addition to the bank itself being licensed by the central bank, which used to be called SAMA at one point, and then it was changed to the central bank, a new regulatory authority came to the table, which was the Central Markets Authority, the CMA, the equivalent of the SEC in the United States, or the FSA, I guess, in the United Kingdom, that regulates asset managers and investment banking. Investment banking being the part of the business that also caters to companies needing either to be acquired, the mergers and acquisitions side of the equation, as well to those companies that want to IPO. So today, I would say the banks continue to operate in their traditional sectors, which I just explained. and they created the capitals to move into something a little bit more spicy, more interesting, rather than just deposits and lending. The Saudi banks, for the most part, till today, have not crossed border for the most part. And if by crossing border, I mean you don't see a large presence, for example, for Saudi National Bank, which is the largest bank, along with Rajhi Bank in Saudi Arabia, outside of Saudi Arabia. So they're very happy in their own territories. And for the most part, their balance sheets, whether their assets are utilized quite a bit. I alluded just a little bit ago to the mortgage sector, which with the introduction of 2030 and the need by the government to increase housing ownership by Saudis, the government created these systems with the banks whereby the banks would lend with a lot more ease and with more assurances. There were some backstops, some guarantees that were provided by the government or specifically the Ministry of Housing in order to encourage banks to lend. So that, if anything, allowed the banks to utilize a lot more of their balance sheets. And finally, since we spoke about 2030, or we brought it to the table, the needs by the government for more liquidity is clearly quite obvious, and I think it's the talk of the day right now in Saudi Arabia. Has put more requirements from the banks to lend the government, and that continues to happen. So that's where the banks operate today, vis-a-vis their evolution from very traditional to a little bit more, sophisticated players, relatively speaking.
So to bring some of those kind of things on the table together, Vision 2030, where banks are today, local Saudi banks not yet going cross-border. There was a recent Bloomberg article, a report that said Riyadh is gradually emerging as a financial hub, and this is really as a result of a government-led Vision 2030 push, taking a sort of carrot and stick approach by making it easier for foreign firms to operate locally, but also using the Riyadh HQ program for leverage. I'm wondering how this drive to sort of make Riyadh more like Hong Kong or Dubai as far as a banking destination affects local banks and how they are playing together in this environment.
The international banks initially existed under JVs and then more recently on a relative basis. Okay. And this happened when Citibank, and I forgot the year exactly, decided to break out of what at the time was Samba, the Saudi American bank. Citibank at a point in time felt that, for their own reasons, that Saudi risk was outside of their appetite. I mean, the country always, in terms of world affairs, ebbed and flowed in a way. And so Citibank decided to sell its stake in Samba and exit the country, which created a bit of a sour taste with the central bank, SAMA, at the time in Saudi Arabia. As you can imagine, having foreign banks in the country does create a sense of confidence in the place and openness and also competitiveness. So the central bank at the time allowed several banks to apply, and they did give licenses for fully owned foreign banks. Those specifically were JP Morgan, Deutsche Bank, BNP Paribas, and I forgot the fourth, but they were, so they came in under SAMA license with an ability to do many things. At the time, I was with JP Morgan when JP Morgan entered Saudi Arabia, keeping in mind that JP Morgan was sort of the bank of Saudi Arabia as far as foreign banks go for the longest time. So JP Morgan was part of the initiation of SAMA back when it was put together, which is the central bank. And then it continued to have excellent and continues to have very good relations, whether it's with the Saudi government or Aramco. The other banks that came to the table, whether it's Deutsche Bank or BNP Paribas, and also there several GCC banks, came into Saudi Arabia as well, all under the central bank umbrella. Now, if you ask me, have they been have they gone outside their own comfort zone? And if you say their comfort zone is definitely working with the government, that is an absolute yes. Selectively with some corporations, yes. Beyond that, the foreign banks have, in my opinion, have not done a lot. Okay, there are reasons for that. When you look at any bank, banks take into account country exposure. You know, how much of their balance sheet they can expose to any one particular country. They look at the risk and risk-adjusted returns. Saudi banks do not consider Saudi risk to be zero, because by definition, if you know you are sort of working within the government, and they don't consider the Saudi Arabian government to be at zero risk. So you are at the end of the day part of the sovereign. So they look at risk in a different way, and accordingly they lend in a different way. They have a lot of local knowledge with the corporations in Saudi Arabia. They have a lot of local knowledge in terms of the consumer in Saudi Arabia. So a lot of the local banks, when they lend, for the most part, they use somebody's salary as a quasi-collateral. The salary is assigned to that bank. And then when it comes down to repaying, whether it's credit cards or any kind of lending, the bank has recourse to that kind of a capability to protect itself. The international banks never went as far as very much understanding local risk, let's call it, okay, whether it's on the individual side and how to protect themselves, or corporations. Interestingly, small and medium enterprises in Saudi Arabia, whether it's in terms of the local banks or international banks, have not been big beneficiaries of the banking system. The banks continue to treat SMEs as high risk, and accordingly, they give the money after a lot of scrutiny. What's been happening lately also, and we haven't spoken about this, is the emergence of fintech. Okay, so these are newly formed companies that are regulated, whether they are regulated, for the most part, they're regulated by the central bank as well. And they have an ability to lend money. Their source of capital, because they're not fully licensed banks, cannot be the same source of capital as deposits which come into banks. So they have their own equity, and they can raise debt as well. But you're hearing more and more about them, the likes of Tamara, for example, the likes of the entities that are doing a buy now, pay later type of thing. And they are working with individuals in the country, and they can work with also SMEs in the country. And they have their own ways of securing the risk. They can use receivables as collateral. They can ask any corporation to assign the receivables to the bank before they can, or to the entity, the newly formed entity, as they lend out. In terms of individuals, they've also managed, interestingly, to create systems which allow them to understand and profile people in a manner that allows them to understand the risk of that particular individual, and accordingly how they would pay that individual. Their default rates till today all seem to be within reasonable numbers. So at least on paper, they all seem to be okayish. Of course, their biggest hindrance is their cost of capital, because the cheapest cost of capital is deposits, and they are not able to take deposits. So it's a very dynamic system that's happening right now. But to your question, the international banks, at least in my opinion, have not gone in. PNB Paribas, you ask them what they're doing. I mean, I cannot speak on their behalf. They're content sort of doing what they were doing prior to them entering Saudi Arabia, but having established an office in Saudi Arabia. Okay. JP Morgan, probably the same thing. Now you would ask, okay, what's the plus of being in Saudi Arabia? I think these banks have been all beneficiaries of the country, whether it's in terms of the relationship with the government and lending the government, or having cross-border M&As with the government. And the government, understandably, wanted these banks to come in and establish a Saudi presence in order to create some kind of a transfer of knowledge to the local Saudi population in terms of the Saudi bankers. So they employed a lot of Saudi bankers. And there has been this spillover effect in terms, if you think about it, when Aramco, which is the biggest kind of example of how a foreign company can enter a country, and by virtue of operating and employing Saudis and training Saudis, a lot of know-how gets embedded within the Saudi system and within Saudi individuals. I would say on that level, probably the international banks have done a very good job. Yes. In a case example, a gentleman who was with JP Morgan at one point and then went to Saudi Forense, became CEO there, and now he is the deputy chief executive officer of NEOM. Rayyan Faiz, he's an example, an example of somebody who benefited from the training of having been with JP Morgan at one point. Myself, I'm Saudi national. I spent 7 years with JP Morgan, and I learned a lot from JP Morgan, created a lot of good relations with clients and got to understand their needs. And then I spun off on my own, and I created my own small boutique company that does, advisory work and real estate development. So I would give credit on that side a lot.
So let's talk about financial literacy in Saudi Arabia. We think it's an area that the kingdom could really improve in significantly. Do you agree with that? And do you have any recommendations of what could be done?
Yeah, Hanaa, this is not a question relating to the banking sector alone. I think the country, by definition, when you were looking at what we're trying to do in 2030, is trying to elevate itself to a place that people want to come and live in and create and be innovative in. And it's a story in the happening. The aspirations are there. There is a lot of work that is moving in to achieve that goal in that direction. But I think what many like me realize is that it will take time. The likes of Singapore, even the likes of Dubai, our neighbor, a lot of the financial centers were not created overnight. And I don't think it's easy to create them overnight. Many pillars have to be in place to attract the right people and for the system to become the kind of system that allows a city to become a true global financial city, London being one of those. And I mentioned others. So maybe the biggest challenge that we have is reconciling the time that we need to do the above with our aspiration to have the above in place yesterday. Okay. And to attract the right people, you need a very livable city. You need an airport that is extremely good from a logistical point of view and covers many global destinations. You need schools that cater to the children of those high-level people, by the way, whether Saudis or expatriates, irrespective, that allow them to come in and put their kids in school. You need an environment whereby what they are used to in terms of services and amenities in any big city can be duplicated within, whether it's Riyadh or, well, let's talk about Riyadh. Riyadh is the main hub, right? I mean, NEOM is still ink on paper with a few, excavation work that's happening right now. So it's far from being realized. So Riyadh, I think, has moved a lot forward. And as you know, Hanaa, and so to speak, women, ladies in Saudi Arabia have been beneficiaries. It was about time of the Vision 2030, opening up the society, equal employment opportunities, their ability to become a lot more independent. So that contributed also to the workforce in a big way, which was great. And for the most part, and I will admit this, I think the average lady in Saudi Arabia is probably today more educated than the average man, because they probably spent a lot of time studying at a time when they could not join the workforce. So now they have this advantage to them. So to your question as to our aspirations, yes, these are grand aspirations. But for Riyadh to become a truly global hub, I think it will need time, and we need to have more innovation there. We have some natural challenges. It's very hot in the summer. We have natural challenges such that the city is extremely spread out, which creates a lot of traffic. Case example, because we're not a true urban environment in the sense of the word. The number of cars per capita in London or in Singapore, for that matter, relative to the number of cars per capita in Riyadh is an order of magnitude different, which puts a lot of pressure on the local infrastructure. So the city is gradually moving in that direction. It will take time. We are also in a race against time because one of the main pillars of 2030 is diversifying the economy. And as oil becomes either a dwindling resource or its value vis-a-vis, the global economy becomes, with alternative energy sources, with economies and other sectors growing vis-a-vis knowledge-based economies. So oil as a commodity could become a smaller portion of any kind of a GDP. So we are in a race against time. I think we can do a lot, and the most that we can do, and the way we talk with each other, my generation, is we need to be part of the system and we need to try. Okay, anybody can be skeptical, but then it's a self-fulfilling prophecy if we're all skeptical. So we're all trying, but it is challenging.
Yeah, absolutely. Well, in terms of thinking about the livable city and attracting people, I'd like to talk a little bit about your real estate business and, being managing partner at Mayasim Al Khalij. Real estate development in Saudi Arabia is focusing on Riyadh. Tell us about that, your business, and your opinion of real estate development.
So Riyadh, historically, from a real estate point of view, grew organically, and in no way you could say in an organized way. Okay. So the concept of proper urban planning, the concept of livability, to be honest, you cannot blame anybody because of the past. We came from a place, Riyadh came from a place where the real estate infrastructure was extremely basic. And you know that, Riyadh was nothing, a small city in the middle of the desert. And then this source of wealth started coming to us. And people's main objective was to have houses, right? And then with the houses, we need some shops. And we need some roads. And so it was more about fulfilling those basic needs than thinking, let's slowly, European cities grew over hundreds of years. And it wasn't a matter of suddenly being endowed with a lot of money. And so everything could be built overnight. And then whether it was being built correctly or not was something that was on the table. Riyadh did not benefit from that. Riyadh grew very quickly and grew in a manner that was not the initial urban planner who worked on Riyadh, I think in the 60s, was a gentleman by the name of Doxiadis. Okay. He was an urban planner. He came to Riyadh. I think he was part of whatever legacy Riyadh Development Authority was at the time. And Riyadh well, Hanaa, it's a grid-like system, it's like these squares. And these squares are duplicated all over the place, right? And initially, the municipality of Riyadh, in order to allow you to build, all what it had as a prerequisite is a very thin layer of a street equivalent that allowed people to get to that dwelling that they were building or that store that they were building. Within the code, there was nothing related to other infrastructure, lights, sidewalks, water, electricity. And so you needed that thin layer of a road, what resembles a road. And once you have that thin layer, you can actually sell that individual piece of land. And then you buy the land, somebody buys the land, builds the house, and goes to the municipality and says, where's my water? Where's my electricity? Where's my etc.? And the municipality gets enough pressure, and maybe 4 or 5 houses aggregate, they go and they provide those amenities, right? And long and behold, another cluster gets built elsewhere, and they go and provide for that cluster. And before you know it, we forgot to put, there was no reason for sewage, because you will not build a full sewage network if you don't have clustering density, that is, because it's expensive, right? And so once there is density, they started adding more amenities. So long and behold, the roads go back and get redug up, and you know what the road situation is like in Riyadh. So, and that happened for the longest time. There were no regulations, and there continue to be no regulations related to the facade of the buildings. There were no regulations related to the parking spots required when you build. So whether you build a high density structure or a low density structure, the roads provided the parking. Well, that created a lot of, smaller roads and no sidewalks, because rather than having sidewalk, you would have cars parked next to the house. So this was all, and I cannot blame anyone, Hannah. I mean, it was not the primary objective. The primary objective was, let's build the house, let's live, and let's get the water and electricity. Okay. So you move forward, you jump forward. People like us came to the system, Mayasim, and we were lucky in the sense that we were able to work with a family that had a very large land bank. And we went to an urban planner in Germany, the same urban planner who created the diplomatic quarters in Riyadh, which I'm sure you've been to, which are planned in a very idealistic manner. And because it's a government plot of land, very large government plot of land, that was created to house all the embassies in Riyadh at the time, and the services related to the embassies, the government, relatively speaking, did a spectacular job. So they created everything all at the same time to, rather than piecemeal in the way that I've just described. So they put in the whole infrastructure, they created the right roads, the right sidewalks, and the government built everything. Okay, so it wasn't going to happen gradually by individuals. The government took on that master plan, and voila, you have the diplomatic quarter in Riyadh. So we aspired to create that on the private side. We aspired, okay. We went to the same urban planner who put together the diplomatic quarters, a company called Albert Speer and Partners out of Frankfurt. And we tried to marry the vision of Albert Speer with the regulations of the municipality in Riyadh. And it was close to impossible, because the municipality in Riyadh did not have the level of sophistication and aspiration as we had as a private sector, because we are a private sector, and this somehow relates to some of the other things we might speak about today, is effectively commercially driven. Okay, the government might look at things not from a purely commercial point of view, but they look at spillover effects. They look at GDP growth. They look at employment. They look at other elements that allows the government to spend money in a manner that is not necessarily purely commercially driven, but has these spillover effects that benefit the economy and the people at large. Anyway, so our aspirations gradually and surely started to dwindle. Okay, we wanted to create an urban structure whereby commercial centers were very clearly within the reach of a residential communities, and they were accessible by footpath. Okay, and we were nixed out. We were told we cannot do that, and the main reason why the municipality fought this kind of a vision is, believe it or not, cars. Okay, because we have so many cars. The biggest fear there is that as somebody wants to go to a commercial center and there isn't enough parking because of the density of cars, they will end up putting their cars all over the residential area. And so the residents would then start complaining about that residential neighborhood turning into a parking lot or blocking. So there's this amazing segregation in Saudi Arabia between the residential areas and the commercial areas. Now, gradually what's happened is the regulator decided correctly to increase number of cars per rentable area, the increased number of cars per an apartment block that is being built. in order to address something like that. So that's happening right now in order to de-bottleneck or to open the way towards a better urban structure. Okay. We are starting to become beneficiaries of that, but it's still not completely there. The problem with cars, frankly, is that, believe it or not, having a parking spot is expensive, meaning you have to build underground, you have to build basements. And if that's expensive, then at the end of the day, the leasable store, the built-up apartment, so to speak, you load that extra cost onto the structure that you are building. So either your lease becomes more expensive or the apartment becomes more expensive. We have an issue with cars. From an urban point of view, I tell you, it's not something that is very apparent to everyone, but every major large urban city in the world has some kind of an infrastructure, whether in terms of public transportation, making having a car prohibitively more expensive. I mean, can you imagine having 3 cars in London near your house, Hannah? What would happen to your, or in New York for that matter, or in Singapore for that matter, or in Paris for that matter? So we have. I don't know how to deal with it in Saudi Arabia. The metro is coming to the system. Hopefully, it will take some pressure off of the roads and off of the requirements for parking. And other solutions have to come into place where the car becomes a little bit more expensive to own and become more of a luxury as opposed to everybody can own a car. But we are way off in terms of that. Now, there are definitely, okay, so that's the private sector. From a Mayasim point of view, just to continue, we ended up going more traditional, okay, for the most part. We have created some, unique developments that are in the form of commercial plazas that are of a more interesting architecture, walkable, inside, outside, inside. Like, you've been to them, to some of them that are like them. And the walk in Riyadh, the Riyadh front, which is now Roshan front. So we're seeing more of these developments happening. There are 2 major private sector developments. One of them is happening, which is the Avenues Mall by Ashaya, and the other one is Mall of Saudi Arabia, which hopefully will come back. There are reasons why it's been delayed. These are very large, super regional malls, there along the lines of Dubai Mall of the Emirates, very, very large leasable area. And I think those will create very interesting destinations in Riyadh. Now, the biggest elephant in the room, as we say, is the government. So the government in parallel is moving along with creating the likes of Dar'iyya, the likes of Gaddiya, the likes of Al-Murabba, the Square, and other developments where, again, the government creates these things not with the only objective of commercial viability, but with the idea to enhance the whole urban environment, right? To make Riyadh a more livable city, to again, I'll say employment, GDP, and money velocity. As Riyadh opened, as Saudi Arabia opened, one of the biggest beneficiaries in the country in terms of what's happened is the money velocity of the Riyal. So the Riyal was staying in the country more as opposed to exiting and being spent outside. And that helped in GDP growth significantly. And allowed the government then to impose things like VAT, because at the end of the day, VAT, no matter which way you cut it, is coming out of the private sector, right? So, but as the economy grew, the government also benefited from that levy, so to speak. Now, you ask about the banks coming into Saudi Arabia and lending, and the international banks, okay, or international institutions coming in. These institutions will come in and they will say, listen, we are not here to do economic development. We are commercial banks, right? And for the most part, the Saudi banks also are commercial banks. So we need to see the commercial viability of any project before we can lend to that project on a non-recourse basis. And by non-recourse, what we mean is that if the project, for whatever reason, fails, the only recourse that those banks have is the project itself. They don't have recourse to the entity that borrowed, the entity being the government, so to speak, or Mr. X, so to speak. So lending to those projects, and you know, yes, the international banks are being invited to come into the country to participate in the 2030. Lending to these projects that have a commercial viability in and by themselves as a standalone, which is not very clear, becomes more difficult. And so the international banks and even some of the regional banks find it more difficult to lend to these projects as standalone projects on a non-recourse basis. And again, I explained what I mean by recourse and non-recourse. So in my opinion, what's the solution to some of that? I personally think we swung too much towards giving the government the main function of developing the country economically and hopefully commercially, etc. There's a lot of talk, Hanaa, as you know, about the private sector feeling left out, okay, or being overwhelmed by government projects. And so the private sector is not participating as much. In my opinion, one of the solutions is to marry the two efforts together for various reasons. To marry them, of course, the project has to be commercially viable. But the government, at the end of the day, can create ways vis-a-vis cooperation with the private sector to either, I mean, by definition, they're subsidizing the project in and by itself to achieve the economic growth, right? And the urban structure, right? So they are, by definition, subsidizing their commercial, the pure commercial viability of the project. They are subsidizing it. But cooperating with the private sector allows the private sector to bring in more money to these projects because there's a lot of private sector money, and also creates many more efficiencies. And the term efficiency is the key. Efficiency and productivity. The private sector, once you put in your own money as a private investor, you no longer have an issue which I will call principal agent issue. The principal agent is when you are someone who's investing on behalf of someone else and it's not really your money, okay? And let's be honest, government employees are employees, right? The consultants that we are bringing in, Hanaa, the McKinseys, the BCGs, every single consultant and his cousin is in the country, has no skin in the game, zero skin in the game, okay? And if they were to have skin in the game or to get their fees by participation, by the success of that particular project that they are recommending, they would have second and third thoughts. The private sector, if it's brought in the correct manner, again, to look at the feasibilities, to ask the hard questions, what is needed to make it at least partially commercially viable, brings in that efficiency because the private sector is putting in its own money. So it's, and that principal agent disconnect no longer exists. Okay, so I think that's where things should be going forward. It's not as easy because the problem with that is that it will slow things. The private sector will not subscribe by definition into every single project that is being created, and the private sector will need more checks and balances and more of a convincing to make sure this project is actually viable than someone saying, you know what, here's the green light, press it, and before you know it, everything's being built. So we need to balance these objectives, right? Time, efficiency, all of these things have to come together. But otherwise, what we're seeing today is that we will put too much constraint on all of the resources in the country. And by the way, by taking time, we would allow the system to breathe. There's a lot of inflation that's coming into the system today because we are straining resources. We are straining human resources, salaries, material resources, raw material that needs to come in, contractors, etc. And so that creates a lot of pressure on pricing. So you're building something for that much more, and then you need to make money out of it. But if you are building it for that much more, well, guess what? You're competing with Dubai. You're competing with Singapore. You're competing with other places that are able to be possibly, I'm not saying they are necessarily, more efficient. And thus, how will you able to compete with them if you're building for a higher cost base? How are you able to compete with them if you have to overpay in terms of salaries and bringing people to the table to achieve effectively the same objective? So that ability to be competitive is very important to create this global hub that you alluded to, that you spoke about, right? We need to have people who can produce for the same price, whether it's goods or services, as anyone else in the world, for the same output in terms of quality and what have you. Now, this is me thinking as an economist, as a banker, and from a real estate point of view, I mentioned what's happening, and I sort of mingled everything almost all together. I didn't mean to do that, but at the end of the day, these, whether it's finance or real estate, they play a role together, and maybe that's what I spoke about just now.
I feel like the government may, and from conversations that I'm having, I feel like the government may be now becoming more and more aware of what you just described. And I'm wondering if you have any insight onto how they'll sort of how they will attract private sector investment, especially into things like the giga-projects where it's, let's be honest, very needed. They need the private sector to be participating in that. Is it a more competitive tender process? Is it a very clear outlay of incentives for the private sector to participate? Where do you think they can kind of come together to make that happen, and it makes both sides happy, both the investors happy and the government happy that they're getting private sector participation in these projects?
So I think a couple of things need to happen. We need to focus more on those projects that are more viable, and we need to stretch the time. We cannot do everything all at the same time, which is what's been happening. And we need to line up the incentives of all of these consultants with the ultimate goal that takes into consideration the ultimate success. That's not easy because consultants want to be paid upfront. What has allowed us, Mayasem, to relatively speaking succeed is we've opted to put a lot of our economic benefit as an advisor to our clients at the rear part of any project that we now. It's not like we don't get paid along the way, but what we get paid, what allows us to eat bread, okay? And then you leave the main course would happen when there is some realization of success. And so a different kind of mindset needs to come to the table. I think also we have many very good local people who understand that this also needs to happen. Their willingness to participate is somehow being hindered by these objectives that do not seem to reconcile in their heads. Okay. And so the objectives have to become more achievable. Can we stretch time? We don't. I don't think we have much of a choice. Time is probably the only commodity that nobody in the world can buy, right? So focus, stretch, bring in people whose benefit ultimately lies in complete conviction that the end game is going to work, and incentivize them accordingly. And you know what? Give them more than what would they take if they were getting their money just sort of a piecemeal. Give them a carrot at the end of the road that is so big that they will become a lot more creative with you. And effectively, that's capitalism, by the way. So
I think we have taken a lot of your time, and I really appreciate it. I think that, your expertise and your view of the economy, the banking sector, the financial sector as a whole, as well as the real estate sector and just the development that's happening within the kingdom under the vision. And your insights and opinions are invaluable. So I really want to thank you on behalf of myself and Lucien for coming on the 2030 today and really telling us a little bit about how you see the kingdom going forward. So Ramzi Abukhadra, thank you so much. Much appreciated.
Hannah, one thing. I'll tell you, since you mentioned in your closing remarks 2030, we have no luxury to fail. Okay? We have no luxury to fail. So all of us who are thinking along the lines of what I mentioned today, it's because at least in our own personal thinking and capacity, are trying to make sure we are hedged so that we do not fail. So that's maybe my closing remark in terms of why we're encouraged, but we're also cautious.
I love it.
Brilliant. Thank you,
you.
Ramzi.
Thank you. Have a great day. Great being with you.